Hi, everybody. March 18th, the market update desk with Scott Riley, NMLS number 157524. I want to go over some of the things that happened yesterday and everything that we've got going on today, leading up to the Fed meeting tomorrow, and how that's affecting markets. So, yesterday, we saw a little bit of surprise in retail sales. The headline was actually less than expected. That came up plus 0.2% month over month versus an expected 0.6%. So a little weaker than expected there. The surprise came in the core retail sales report. That was up a pretty impressive 1% month over month versus expectations of over only 0.4%. Now, one theory to that is things are being purchased ahead of potential tariffs. So we might be seeing some pulling forward of purchases. We'll have to wait to see what kind of the next 2 months retail sales numbers show. But it is nice to see that retail sales are up. Now, when we start talking about what's affecting the market with the Fed meeting, the last GDP report from the Atlanta Fed showed that Q1 2025 GDP was tracking at a negative 2.1%. But very important component or analysis of that does not contemplate the impact of gold, which has been going up very strong. In fact, I believe it's over 3,000 an ounce right now. Adding that back in would actually cause the reading to be closer to flat, which would still get the attention of the Fed, but would be better than what we're showing right now on paper, at least. The Fed's going to conclude their meeting tomorrow, and we're going to look to compare their projections on many things: the Fed funds rate, inflation, unemployment rate, and GDP. We're going to compare that against their last meeting that they released their projections in December and see how that tracked. They're also likely going to contemplate some of the weaker GDP estimates that we just talked about from the Atlanta Fed in their discussion. We will really look for clues on the balance sheet, which could be very important for the bond market. Are we going to see easing or tightening? Are they going to let more run off? And that's going to play a very large impact on the bond market, which will impact mortgages. Now, later today at 1 o'clock, we get the 20-year bond auction. That might have an impact on today's pricing, but probably not too much. Now, also, we got the National Association of Home Builders Market Index report. Showed that the overall index for the builders fell 3 points to a level of 39. Current sales fell 3 points to 43. Sales expectations held flat at 47. Buyer traffic actually fell by 24. Fell by 5 points to 24. Now, builders are estimating that it's going to cost in the neighborhood of about $9,200 to build a house with the projected new tariffs that could be in place. That's going to affect some of this buyer activity. Now, permits were essentially flat on a month-over-month basis, but the year-over-year, we are seeing a trend happening of a decrease in multifamily per building. Now, housing starts bounced back by 11%. So permits were flat on single family, down on multifamily. The starts were up 11%, with a lot of that coming from the South and Northeast region after having a harsher than normal January. The Midwest continues to be, our market, a little bit soft. Multifamily homes that are under construction and completed are both down about 20% year over year, which points to the potential for rental price upward pressure in the future if we continue to see a contraction. We had all this building. Now, we just really need to stay steady and not decrease, because if we decrease, it could lead to some higher rental prices and lower vacancy rates. On the technical side, mortgage bonds are continuing to trade sideways. They're getting squeezed, in a pretty narrow range between their support of the 25-day moving average and a topside resistance of 101.39. It's a similar story on bonds. Yields are trading in a narrow range between support on the 200-day moving average and the overhead resistance of 4.33. Now, we did challenge that topside resistance of 4.33 this morning, and we've bounced down from that. Luckily, we did not break through. Now, this is all on the precipice of tomorrow. The question with the Fed meeting is not, are they going to lower rates or raise rates? They're going to pause still. The question is going to be, what's the commentary? What's the tone of the commentary? And what's Chairman Powell's Q&A going to be tomorrow? That's going to be very important to follow. We'll keep up to date and get that out to you. It's a sunny day as I look out my window again in West Michigan. It's home buying season. Give us a call. We'll help you through this process, help you make your offer more competitive against all those other ones that are out there, and get you into that home you're looking for. Give us a call, 616-293-2189. Have a great day.